Hello. In this video, I want to share with you guys my opinion on trading signal services. And I wanted to give you guys a step-by-step strategy on how I would trade a day trading signal service today in the year 2023. And I think this can help a lot of new traders out there and just give you guys some realistic ideas and opinions from the perspective of a trader who has experience in the markets for a few years. All right. So I had the idea of making this video because a friend of mine reached out to me, and this guy doesn't really have a lot of experience trading. And he told me that he was experimenting with some day trading signal services, and they were trading the forex market and the gold markets like CFDs or spot gold and that type of stuff. And he was kind of frustrated. So in this video, I want to explain to you sort of the industry that you're in. And then at the end of the video, I'm going to give you guys a step-by-step strategy on things that I would do if I was choosing to day trade a signal service and make decisions based on somebody else's signal service that exists that I'm subscribed to. So thank you for joining us. Remember to press the like and subscribe buttons if you enjoyed this content. And if you want to support me, you can click on the first link in the description, which will take you to interactivebrokers.com. So let's get to it. Someone who's flashy and who has status on social media has the potential to market out these signals to people. And most people out there that are researching about day trading are not exactly people who are already crushing it in business. Maybe some of them are, but on average, it's people that want to look to potentially make an extra stream of income. And they see these people on social media that are posting this stuff. They have these cars, they have this lifestyle. They're sold that idea from them. The bottom line is that people get into this and they get into these signals with an idea that they may not have to put in a lot of effort into what it is they're doing. So they're going in with a lazy mindset to begin with because that was pretty much the sales pitch that got them to sign up to start with. If someone has a sales pitch that says you're gonna have to do more work after you sign up, that's not gonna really sell it that easily. So normally, the fish that are getting caught in these things are people that are lazy, that don't really expect to be putting in a lot of work, and that's why day trading in general has such a high failure rate. So if you guys ever heard of the 1% club, you can consider it the 1% of income earners, or the 1% of people that are actually going to be putting in enough work that can outwork most of the other people in the same industry, and those are the people that end up going through. And it's always gonna go back to that statistic most people hear, which is 90% of people who trade or 90% of people who do competitive activities end up quitting, end up failing, whatever. But what I really believe the 1% club is the 1% of people who watch this video, who actually implement all the steps that I'm gonna provide to you as this video progresses here. Those are the people that are actually going to give themselves the most chance to succeed and operate a successful trading business or a successful business of trading off of other people's signals in a very smart way. But what I'm trying to say is that most people generally are not willing to put in that amount of work. They're going in with the mindset that they don't need to put in the work. And this is, in my opinion, the reason why most people end up giving up, most people end up failing in trading, because they're simply not willing to put in that much effort into something that they know deep down it may not have any return in the end, or it may not have a good enough return for whatever they've programmed themselves to think is a good return. When it comes to the average trading signal service or education trading service, the people that are being targeted by these Instagram marketing schemes are generally people that have little to no experience trading to start, and they do not really have an understanding of the specific products that they will be trading, and they're sold the idea from the marketing tactics and the flaunting of the lifestyle. So me personally, when I see a page where, let's say it's a woman, she's attractive and she's driving these nice cars, and then she starts talking about trading, for me that signals just a huge, huge red flag, because trading is not about that. And you're gonna learn this as you go on in your trading journey. But it's the next part where people mess up. It's the fact that by nature, most people are just not fit to be traders. Just like if you threw most people into a fighting ring against someone who knows what they're doing, how many of them you think are gonna beat the guy who knows what they're doing? Very small percentage, probably none of them. Trading is no different, even if you're following someone else's signals, and we'll get to it here. I'm gonna ask you guys some questions here regarding your own trading signals, questions to ask yourself regarding signal services. So, even if you made a return from a signal service, let's say you traded a couple days, you started making a little bit of money in your trading account, do you know your odds of keeping that money? The next question is this: are they providing real-time signals in a professional and efficient way? And I'll show you what that is in a second. Or are they delayed signals that a user's typing out and they're just writing things like, for example, Tesla call, expiry this one, and that's it. They're not putting like a target or a stop loss. They're not even giving you like a time frame for the trade. They're not giving you what they think of the trade. Okay, so let me ask you guys, do you know what a good quality trading signal is in today's day and age in 2023 with the technology we have at our disposal today? I'm gonna show you what I think, to my standards, is a good quality signal. So over here on my phone, I have Telegram opened. And what I'm going to do is click the mouse over on my trading software over there. And I'm gonna show you my phone afterwards on this Telegram app here. There's a bot that I made and I'll show you. You may not be able to see this. I'm going to place an order on my desktop. I'm gonna click the mouse right now, click. Okay, now I placed an order. And as I placed that order, I don't know if you guys can see this right here, but if you look at the most recent message there, it says new order and it shows all the data associated with that order, okay? Do you see that? That is a real-time signal that is being submitted from my trading software to a Telegram bot that I made, okay? Now what I'll do is I will cancel that order. So now I've canceled it by clicking the mouse. And what we have are 3 notifications regarding canceled orders right there. And that's just the way I have it set up currently. Again, it's still in testing, but you can see how real time that signal is. Now, I can probably make a bet that the most people that provide day trading signals are not providing them in an efficient way like that, where as soon as the trader clicks the mouse, it provides a signal right away to the users that subscribe to the service. So keep that in mind. If you're subscribing to a service, you want to know exactly how the signals are getting sent. Are they typing them out? Or is it actually a very efficient service that a lot of consideration went into how they're providing the service? All right, cheers, guys. Hope you enjoy your coffees. Coffee's a magic drug, by the way. Okay, next question you need to ask yourself is this. Do you really know the stats behind the traders you're following? And most people don't. I bet you that the traders themselves that you're following don't even know their own statistics on a high enough level that they need to be, okay? Trading is not about just taking the buy and sell signals here. It involves a high degree of emotional awareness and a solid plan for money management that takes into account many variables. Now, what I want to stress to you, okay, so if you're a new trader, an experienced trader, the bottom line that I can translate to you over this camera, over this internet here, is that as a trader, you are a money manager. You need to make educated decisions based on your unique situation as to how you are going to decide to allocate your capital. How are you going to risk your capital or not risk your capital? You don't have to day trade. You don't have to swing trade. You don't have to do anything. At any moment, you can stop what you are doing because you may have a better opportunity to manage your money. Someone who's been trading for a while, maybe they will reach a day that they realize, well, I'm busy with other stuff and all of a sudden I've got an opportunity here and here, and this is now where I need to be generally putting more of my focus because the risk to reward in this opportunity, it could be any opportunity in life, that opportunity now has a better risk to reward, a better sort of profile to it than anything else in that person's situation. Therefore, you need to think of it like that. So when you're taking a signal, right, you're subscribing to a signal service, you have to think of it from a money management perspective at all times. You don't have a lot of experience trading, so you can't rely on a skill set of trading. People who have experience trading the markets, they have skills related to reading price action, reading order flow, understanding fundamental data, or other skills like that. Whereas someone who doesn't know those things, they're only relying on one thing. If the person that's submitting the signals knows what they're doing, and if they're a profitable and consistent trader, what the person with no trading skills can do is use the data from the trading signals they're subscribed to and use that to empower their own trading even more because they can now make more educated money management decisions. So here's my point. If you knew the stats behind the traders, you can minimize that emotional impact when your account value changes. So for example, my buddy who was taking the signals there, he was talking to me the other day and he felt like absolute crap. I understood him because I've traded myself and I know how it feels when your account value goes up, back down, or you trade for 3 months straight, you're on a good run, and then in 1 day or 2 days, boom, you erased all that work. I know how that feels. It can be emotionally destructive. It's a very negative emotional experience that you have to deal with. So if you knew the stats behind the traders, you could minimize that emotional impact when your account value is changing because you have hard cold data that you're working with. You would be moving from total uncertainty, which is similar to gambling in a casino or even trading in a market and believing that you have some sort of an edge when in reality you don't, you just think you do, and that's kind of delusional. And you would go from that to minimizing that uncertainty aspect using the power of data. The data gives you clarity into what's really going on, and it helps you adjust your money management plan. And this is where it's going to be hard for people, right? Because there's work involved. How does anybody get into the top echelons of whatever it is activity that they're trying to get good at? The only way is to put in work. You're not going to get there elsewhere. There's no shortcuts. I can repeat it to you guys 100 times. You could trade, right? You could trade someone's signals. You could be profitable for 2, 3, 4, 5 days, maybe a week, maybe a month. But you're gonna reach a point where you start to lose, okay? And when you start to lose, if you don't know how to handle that, you're gonna go on an emotional spiral. You don't have to believe me, it's gonna happen. You're gonna end up back on this video after that. The way that I would go about trading, day trading signals, let's say someone else's decisions and they're sending me the alerts, okay? The way I would go about it is by using their trading data, collecting their data and analyzing their data and adjusting my money management plan based on the data that's coming from the trading statistics that I'm subscribed to. So I'm gonna give you an example of how I would do this. So it's time to learn about tracking trade statistics. Now this should probably be the absolute first thing any trader learns. Whereas most people, when they start trading, they start learning about technical indicators, what's a MACD, what's a moving average, what's a fucking bullish engulfing candlestick. When in reality, that stuff doesn't matter if you don't even know if the bullish engulfing thing or if any of those things actually are working on a long-term basis. What's the data behind those things? And of course, most videos that I've watched, at least, that show those indicators do not show historical, real data and facts behind those strategies. They're just showing you the strategies, okay? So now I'm gonna give you a step-by-step procedure and describe to you how I would get acquainted with the signal service that I will be subscribing to and how I would trade those signals, okay? The first thing is I want to learn about how is the user submitting these signals, via what messaging service are they submitting them? Are they automated signals being sent by a bot, or are they manual? Is the user typing them out manually with their own keyboard skills? The next thing is what products are being traded. So are they trading US spot gold? If they're trading that, then you need to understand what are the trading hours of that market. For example, you need to become acquainted with the markets that the signal service is trading. Are these markets centralized on one exchange, or is the liquidity on so many different exchanges that you can't really track it, like sort of like a forex market or a crypto market? The next thing to look for is what time of day do most of the signals occur? And look at that relative to the trading hours of that market. When's the official trading hours open and close of that particular marketplace relative to when the signals are occurring, okay? Next thing is, how far away are the stop loss and targets? So first of all, I hope there are stop loss and targets, because if there aren't, then that trader submitting you the things are not really submitting you good quality signals. They're not even telling you how to manage your risk on that. But what you got to consider is how far away are the stop losses, how far away are the targets, because based on that, you're going to have to adjust your position size for your trading account, and you need to make sure that you're trading within the risk parameters you've set for your trading account balance. Now, this is where most people are going to be like, why do you have to do that? I don't feel like doing that, right? As soon as you get to the point where most people say, I don't feel like it, that's when you know you're probably breaking through a boundary. It's this. Demo trade every single signal they put out for at least 30 trading days. That way you get a decent sample set of data to work with. And that means you have to be keeping track of all of the trade entries and exits and all of the stop loss and target orders and where they are. Now, what's annoying about this for most people is that you need to do this knowing that there will not be any guarantee of getting reliable data. The trader's results could be a total unreliable roller coaster. They could be up and down every single day. And this is okay. You need to remember that you're running a money management business first. And money managers do not invest money into things that are more likely to lose us money or not give us anything. You're approaching it from an educated investor's perspective. You're looking at the results, you're tracking the results, and you're saying, okay, this trader is consistent and I'm going to decide to allocate risk, or this is not consistent, therefore, as a money manager, I'm not going to allocate any capital to this. Most people without trading experience will complain about this, and they would prefer to risk their own money. And I'll tell you why this is the case. Because they've already been fully convinced by the opposing party that it's fine for them to deposit their hard-earned money into a trading account and risk it on a trading signal that they've been told is profitable. They won't say this, but they actually want to experience that rush of making money without working for it. Tell me if you know what I mean in the comments below. I know this, guys, because I used to be this trader. I used to have this mindset until I realized how important data is in trading. The next step in your procedure is this. Before you begin to place your simulated trades, you need to make sure that you've developed at least a basic risk management plan for the account. Since you don't even know which trading signals are working or not, you will have to allocate an even number of risk to every trade. And this number should be around 0.5% of the account value to around 1% of the account value at most in terms of risk per trade that is being taken. So that's how much risk you're allocating for every single trade. This is also a moment where you might need to consider if the products being traded fit within the risk tolerance of your trading account balance and your actual real life risk tolerance. Because again, at some point you may actually be trading these signals in your actual account with your actual real money. So example, if the person providing the signals is trading something like Tesla stock options, okay, you need to understand that these are generally higher risk products. They have high premiums. And in order to maintain a sound money management plan, sort of like risking 1% of your account per trade, it's going to require a larger trading account balance. Don't expect to trade Tesla options and maintain a 1% risk of your account if you're trading, say, I don't know, a $2,000-$3,000 account. It's not going to work, okay? Another example would be if the person is trading the S&P 500 futures, which is very commonly traded these days. If you wanted to follow their signals on a smaller account, like a couple of $1,000 account, you could trade the micro ES product, but then you will also have to start taking into account the average size winning trade. Because if this amount is too small, meaning that if the trader is more of like a scalper trader, then if you're trading the micros, commissions might start to become an issue for you if you're trading a live account. So little things like this will matter when it comes to your overall like profitability at the end of this stuff. And then the last takeaway with this is that your risk management plan should change and you should alter it in the future once you start to get enough data from the trading signals you're following. What this means is that when the trader shows consistency on certain trades, you could decide to allocate a little bit more risk on those particular trades once you have enough sample sets of data to work with. Again, this is where I think it's going to be a little bit hard for most people to break through, but I'm giving you guys a step-by-step approach here. We're not done yet. The traders providing these signals, they may not even be following their own statistics as ruthlessly as you need to be if you want to be actually consistent with this. You want to develop a way to keep track of the trade statistics of each of the trades that are occurring. What I would recommend is trading through a trading software that allows you to keep track of all of your trading statistics and then get that data out of the software into another program that can then be used to study the data on a deeper level. What I use for trading and also tracking the trade statistics is Sierra Chart. The reason I use it is because, number one, it provides very good trade statistics and accurate and precise trade statistics. And you can go back and ensure that all your historical trade statistics are 100% accurate if you use the trade service that they provide for futures. This is only for the futures market though. The second reason why I use it is because I have experience coding and I can go and parse all the trade statistics data for certain things and basically code my own logic for looking at the trading data. Whereas for most people, this is not going to be the approach they take. So I'm going to recommend you another option for that. You trade using your software, and then ideally you want to export your trade statistics to another software that specializes in trade journaling. One popular option I know of is called TraderView. I'm not affiliated with them, but I just know about them. They're very popular in the trading world. And what they do is you can export your trade statistics to that platform, and then you can view them and view their own sort of analytics and the way that they look at the data. You need to study the data yourself. Either you can become creative and code ways to study it and look for anomalies, or you can use the methods provided by the trading journal software like TraderView, for example. When you're looking at the data, again, there's no perfect way to do this, but the way I would do this is start by looking for things that are brutally obvious, that stick out like a sore thumb, and look for things that seem consistent. Like you look at the results and what seems consistent here. So here's a few questions you could ask that can get you started. First question is, are most of the trades taking place inside of the real-time hours trading session for that market? Or are they taking place in the after hours market? And then once you know that, you can look at the consistency of the trader in the real-time hour session compared to the consistency in the overnight session. How big is the average winning trade versus the average losing trade? So out of all the trades the trader's taking, how big are their winners in the marketplace And then how big are their losers? Are they staying in the losing trades longer than they're staying in the winning trades? That's also something to look out for. If the winners are too small, it's going to be hard over time to kind of generate consistent income from this. And again, there's other factors that go into it, but the more factors that you start including into it, the more you go into the skill aspect of like trade management and techniques that are used for that. If you're a trader and you don't know about any of those skills, then you can't be using that in your own decision-making process. You're just going exactly with what the traders are providing you. You're trading exactly on the signals they're providing you. So in that case, if the traders are losing a lot when they lose and they're making a little when they win, that's pretty much a red flag and you should probably seek out another service. The next thing you can look for in the data is there a specific time of day on a specific market that the trader is underperforming or outperforming? And then the next thing is if the trader is trading multiple symbols, which ones are generating the most return and which ones are generating the most losses. So that way you can potentially adjust your plan that you may not want to be taking all the signals. You may want to only adjust and take the ones that are showing the most amount of consistency and cut out the ones that are showing no consistency or the ones that are losing basically. Another thing to look for is this. If the trader is providing additional text along with their trade signals, like let's say they give you context around the trade, they're typing out a description for the trade signal, are you able to see any patterns with the trades working or not working depending on how confident they are when they write that description for the trade? So I've heard of stories about this in the past. There was a story by a trader named Tom Dante on YouTube. He's a good YouTuber. And he told a story about a trader he knew that all he did was fade other traders. He would keep a notebook of like dozens and dozens of traders, and he would know exactly which ones were profitable and which ones were not. And he would basically choose to either fade them or not fade them. And this is sort of similar to what I'm describing to you guys in this video regarding following trading signals. And if you can kind of pick up on a pattern and you can see every time this trader is confident about their trade, they lose, then that's something that you might be able to trade on. And then the opposite would be like, let's say every time the trader's just not confident on the trade, but they're taking it anyways because their signal's telling them to take it. Every time that happens, the trades are winning. That also might be something you can trade on if the sample set is big enough and it's really clear, sticking out like a sore thumb in the data. You guys get where I'm coming from over here. I hope some of you guys are following. If you enjoyed this video, click the like button. I love providing this kind of content for you guys. And again, it's my duty to do so with this YouTube channel, so thank you. So again, these are a few things to get started. The bottom line is you want to determine where this trader is making their money and where they're losing their money. So that way you could potentially take their signals in a smarter way than they're actually providing them. Be a smart trader, be a smart money manager. Now, the last thing I wanted to mention to you guys, which is totally my opinion, but I believe this is absolutely true and everybody needs to understand this, is that probably 1% of you out of the people watching this video are actually crazy enough to go through all of the effort to really track down what these traders are doing. And this is why most people end up quitting or making excuses and stopping. Because the idea of dedicating time and energy to something that you're not sure is going to even provide you a return makes you feel uneasy. It gives you that weird feeling. It's like, why would you do that? So ask yourself this question. I'm going to end the video on this. Are your odds better if you know what you are betting on, or at least have a better idea, or knowing less about what you're betting on? Let me know what you guys think in the comments below. Thank you for watching, and I will see you in the next video. Cheers.